Hello, and welcome to Virtual Investor Conferences. My name is Matt Lateplo, and on behalf of OTC Markets as well as our co-host Social Suite, we're very pleased you have joined us for our next live presentation from Century Lithium Corp, a lithium company focused on developing the Clayton Valley Lithium Project. Please note you can submit questions in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I am very pleased to welcome Dr. Bill Willoughby, President and CEO of Century Lithium Corp, which trades on the OTCQX Best Market under the symbol CYDVF and on the TSXV under the symbol LCE. Welcome, Dr. Willoughby.
Thank you, Matt. It's a pleasure to be here with you. And thanks to OTC Markets for hosting this event. We are Century Lithium. Formerly, we were known as Cypress Development Corp. We still operate in the United States as Cypress Holdings, and you'll see that in our US OTC ticker symbol. This is our project, which is located in Clayton Valley, Nevada. Our project area is here in the foreground, and our proposed plant site that we're looking to develop is on this ridge just off the edge of this flat. Our project is all about extracting lithium from clay, and we do that with a process which is compatible with the area that we're in. It's a chloralkaline process. We use a sodium chloride in our process for leaching, and that's the water source that we have in the valley. We'll carry on into the talk, and we'll flash up the statement of cautionary statements. If I say anything forward-looking, this is where you come back to see whether I was talking out of line or not. And who we are, we're a Canadian company based in Vancouver, BC. We're listed on the TSX Ventures Exchange under LCE. On the OTC, we're under CYDVF. Our focus is the Clayton Valley Lithium Project. We're currently trading at about 88 cents a share on the Canadian exchange, about 66 cents on the US. We have 147 million shares outstanding, fully diluted 175 million. Market cap sitting right about 100 million Canadian. Our treasury, or 100 million US, excuse me. Our treasury is very well funded. We have about 18 million US in the treasury, 24 million Canadian as of the end of the last quarter. Our focus today will be on discussing our project in Clayton Valley. Our project is at the feasibility level. We're closing in on the completion of a feasibility study, which we began over a year ago. The way we've approached this project is with a lot of ESG values in mind. We began first with looking at a sulfuric acid leach. We shifted that emphasis over to a chloride system. We believe in that approach. We're compatible with the resources of our area and using a saltwater brine as the main driver of our process. We approach the project in a way that shows the best practices for environmental planning. We have a good opportunity here to utilize solar in the process as our power source to drive the production. And we have a solid commitment in all areas of ESG in terms of values for the local communities and environment. Century's vision is to become a domestic producer of lithium. Lithium, as we all know, is an important strategic commodity necessary for the production of lithium-ion batteries. In Nevada, there are several large lithium claystone deposits. We are one of those. However, we are the only one to approach our project using a chloride leaching approach. And we did this because we feel that we have a unique opportunity here with our environment. Being in a chloride basin means we have salt water available to us, and that's the driver of our process. For our location, we are in Nevada. We're located about halfway between Las Vegas and Reno along the California border. You can see our project site in about halfway between the two cities. To the south, we have a pilot plant we've had in operation for over a year in Amargosa Valley. Our project comprises about 5,400 acres of Bureau of Land Management administered land, BLM administered land. The large area you see in the black outline is our project area. You can see a band of white material running right through the project. That is the claystone deposit. We'll talk more about that in a moment. To the north, we have a geothermal lease, which may come in play in the future. We have great opportunity here for solar development in the valley. To our northwest, you can see the evaporation ponds of Lithium Corp. That's a lithium brine evaporation operation, which has been in production for well over 50 years. And again, the key word there is brine, being salt, and salt as being the sodium chloride, which is an essential element in what we use in our process. I mentioned we are one of three advanced projects in Nevada that are at the feasibility stage or higher. The other two are Lithium America's Thacker Pass project in the north part of the state on the Oregon border. They're at actually in the construction stage. Ioneer with Rhyolite Ridge is about 40 miles to our northwest, and they have completed a feasibility study and a pilot plant program. And you see above that, there's two brine projects, Albemarle, of course, producing at Silver Peak, and adjacent to them is Schlumberger Pure Energy, who is working on a pilot plant at this moment in the valley for lithium brine. We do have a unique setting in Clayton Valley, which differs from other locations in Nevada. We are in a closed basin, and that closed basin means that we have all water drainage is towards the center of the basin. No water leaves the basin. And water rights, as we know, are very tight in this area, in Nevada in general, but particularly in the Clayton Valley. We're very fortunate that we have a water right for 1,770 acre feet per annum. We acquired 2 years ago. The deposit itself sits on the east edge of Clayton Valley. This is a generalized schematic of cross-section of the valley done in the 1960s. You can see the lithium-bearing clays are the hatched area dipping towards the center of the valley and then dipping away out towards the east. Where we're unique is that being on the east side of the valley, we're very fortunate that all the faulting has uplifted the stratigraphy of clay sediments and made those exposed at the surface. So our project has virtually no stripping that's involved as far as mining. Once we get into the mining and the clay, we're in it, and there's virtually no strip ratio. And you can see by the size of the valley, or about 20 plus miles across, there's a large amount of sedimentary fill in the center. This translates into billions of tons in resources overall the whole valley, but in our uplifted area in the project, we have 1.3 billion tons, a large amount of resources we've identified, and this is from our PFS, pre-feasibility study 2 years ago. And so we have probably in the whole east side of the valley, to go several billion tons that are exposed. We focused in on the area that's right at surface. It's decent grade for processing. We have, however, only identified a small portion of that 200 million tons, which are necessary for the mine plan. And that gives us a mine plan that will extend for about 40 years at 5 million tons per year. These are some results I put in this slide. It's actually over 2 years ago from our pre-feasibility study, but some of the metrics here are similar. We're looking at a target rate for production of 15,000 tons per day. That would carry 5.5 million tons for over 40 years of production out of the claystone. Claystone would average about 1,100 parts per million lithium, or 0.11% lithium over that time frame. The claystone is quite uniform in grade and character. So once we're in it, it's pretty uniform all through the sequence of mine production. With that, an 83% target recovery, we're looking at a production of about 27,000 tons per year of lithium carbonate LCE equivalent. There are other numbers on this slide which are important. At the time we did the PFS, we were looking at a CapEx of under 500 million and an operating cost, production cost for lithium carbonate of about $3,400 per ton. World has changed, as we know, through the last 2 years. A lot of inflation occurring, a lot of tightness in the supply market. What we know at this point in working on our feasibility study is that these numbers will be higher. Can't say at this point how much higher, but a benefit is that also the price of lithium has gone up. We're probably looking in the range of $20,000, $25,000 a ton as a base case number for our feasibility. We'll see how that holds up as we get to the final document. I've been talking a lot about salt and the chloralkaline process. I'll tell you why this is important to us, because we are able to take sodium chloride brine, which is the water source in Clayton Valley. We're able to run that water source through an electrolytic cell, which is the basis of the chloralkaline process, electrolyze that saline solution, drive the hydrogen and the chlorine off as hydrochloric acid, and another product that we make in this process is sodium hydroxide. The hydrochloric acid is essential for our leaching reagent to put the lithium into solution in the first place from clay. And the sodium hydroxide is our neutralizer. As we bring the pH up and drop out the unwanted elements, that's available to us to use. However, we only use a portion of the sodium hydroxide. It's a valuable commodity, and right now we're part of the feasibility study is we're looking at possibly economic benefits of surplus sodium hydroxide sales. Our extraction process here is diagrammed. This is a bulk sample which we took a year and a half ago out of the project. It's 500 tons. We've ground that, crushed that up, and stockpiled that. This is over by the Tonopah Airport, northeast of Tonopah, where we have our sample prep facility. We take the sample feed, we run it through an attritter, which basically breaks down the clay. We then add water and acid leach it. The leaching time is about 4 hours at about 6 gram per liter acid concentration, fairly low concentration of hydrochloric acid in an agitated setting, in an agitated tank, which is heated. We take that liquid which comes off of the leach tank, we run it through plate and filters now, and then that is our final tailing product. Once we squeeze out the water, the liquid that comes off of the plate and frame filters, we run as pregnant leach solution. And one of the big benefits of the chloralkaline process is that we're able to use easily ion exchange. We hear a lot of talk these days about direct lithium extraction, DLE, and that's just taking an ion exchange process like you'd have for your water softener in your home and being able to load it, that resin in the ion exchange column with lithium, reject the other elements, calcium, magnesium that you don't want, and then being able to concentrate that and then reject the most of the stream, and then from there you concentrate the last part of the solution. And in our case, we do some evaporation and reverse osmosis, and we are able to produce a pure lithium carbonate at the end of the day. This is a view of the inside of our pilot plant. This was actually over a year ago. And things have really changed in there. We've simplified a lot of the steps. We've added a second leach tank, which is a tank in green that you see. The tritter is over to the right of that. The slurry that comes off of that, instead of being directed through this bank of countercurrent decantation cells, the beige units you see, is instead now just run straight to a plate and frame filter. We've had good success doing that and been able to eliminate a lot of this extra pumps and tanks that we had originally in the pilot plant. And we've made a number of other innovations, and those are all progressing very well. Bottom left-hand side of that shot, you can see the that is the DLE area, the ion exchange. That original equipment to the ion exchange, we acquired a license off of a company called Chemionics, and that license goes with the project for its lifetime. And it's not encumbered by royalties or other fees. We were in communication with Koch Energy Solutions, KES and KTS companies, and they are a very large company, and they're actively involved in ion exchange and all sorts of recovery processes. They liked this system. They acquired the license rights off of Chemionics to it and have expanded it now into a process they call LiPro. And I'll talk some more about the relationship between us and Koch here in a moment. Let's go to the next slide. Another view of our pilot plant area. One of the innovations we did was we removed this, what you see in the middle of the slide, kind of steel piping unit. That's a vacuum belt filter. We went away from that vacuum belt filter. That was one of the first steps we did in the pilot, and then went straight to a pressure press with plate and frame filters. On the right-hand side, you can see the bulk ton sacks, 1 ton sacks of clay material that we bagged up from the Tonopah Airport, brought that sample material down. We run about a ton of that through the pilot every day. Pilot plant operates on a 7-day on, 5-day off schedule. And with that schedule, we're able to reach steady state almost within the first 6 hours in the pilot. So the pilot's been very simple to operate, very good safety, perfect safety record there, knock on wood. And it's so efficient that we only have 2 operators on shift when we're running. I'll go to some of the highlights over the last 2 years. I actually constructed the pilot plant prior to December of 2021. In December of 2021, we first got it running. As it was about the same time we acquired our water rights in Clayton Valley. We began a feasibility study on the project in March with Wood Engineering out of Vancouver. And we subsequently to that worked out an arrangement with Lithium Corp for the acid plant portion. The chloralkali plant is a major part of the project. We moved through the pilot plant testing, and by September of 2022, last year, we produced our first battery grade lithium carbonate and 99.94% purity. We've since produced several batches of pure lithium carbonate. Talk about that in a moment. That's been done with a company called Saltworks in Vancouver. In February this year, we began collaboration with Koch Technology to work on the DLE portion, the ion exchange. That's been it's about its 3rd month of operation right now. It's going very well. And with that, we've developed a couple of new twists in the DLE area that are proving out to be very prospective for the actual DLE design and being able to reduce the equipment both in the DLE area and in the downstream processing. So Koch Technology owns the license rights outside of Clayton Valley for what is now called the LiPro process, but we're working closely with Koch. We're getting some benefit on the engineering side from them at a reduced rate for the design of the DLE area. This is a program which is separate from the feasibility study, but likely with the results that we're seeing, we'll want to incorporate it or just take a lot of consideration of the design of that into the design of the actual plant. KTS has been quite helpful in providing training and off-site support, but our crews, once they were trained, have been running the DLE area quite efficiently, and that's with the Koch add-ons. And final recovery from our DLE area, we were making a solution which was running about, I think it was about 1.6, 1.7 grams per liter lithium with kind of higher than we wanted sodium content. And we ran that in totes up to Saltworks in Vancouver. From that, we produced, actually we've produced 4 batches now that have been battery grade lithium. better grade generally being 99.5% purity. We're hitting close to 99.9, 99.95 type of grade. So very good there, low impurities. Quite happy with the work that's been done at Saltworks. And with the changes that we've seen out of Coke now, our grades out of that PLS have gone quite a bit higher. We're now running closer to 8 gram per liter. Lithium with less than 8 grams of sodium and other elements in it as the feed solution to the final production of lithium carbonate. So where are we at today? We're working on our feasibility study very hard. We're doing some reviews and optimizing steps, looking at all these things that we've learned in the pilot plant over the last year and trying to downsize the number of tanks and pumps that we have in the process. Got a process which is very resource friendly, and we've commenced our permitting process, working with the BLM, going back, doing some baseline studies that they wanted to see, going back to our previous baseline work and updating those. And we're working towards getting a plan of operations together and something in front of the BLM later this year or early next year. So an exciting time for us. We're should see this feasibility out soon, and we're working in a way that we best utilize our resources in the valley. And in the feasibility study, one of the things we're doing is we're looking at how do we modularize the entire process, be able to start up smaller and still be economic and have a commercial plant which we can rapidly ramp up to full production. And that's also part of what we're doing right now in the process of optimization. So our plans continue the permitting process. And as we do this, we're going to look at financial opportunities, and those might include government grants and loans. I think we'll be in great position for that. And also look at strategic partnerships. We've got a number of people, some likely candidates, but I think our project's in great shape for moving forward. And with that, I'll invite Spiros online, and we can move into some Q&A if we like. Spiros, are you there? Oops. I am without Spiros, I guess. Okay, well, I'll take over here. The question, how far are you away from the Albemarle mine? Well, our project joins the Albemarle property. Their evaporation brine pools are within a mile of our property edge, and their production plant is in the town of Silver Peak, which is about 10 miles to our west. Next question. Have you or do you plan on sharing lithium samples with potential third-party clients? We do have samples, quite a bit of samples actually now, from 4 lots of lithium that we've produced out of Saltworks, and we have shared some of those with prospective third parties. Question from Steve, another person. What progress are you making on financing towards the initial CapEx? Well, we've had some expressions of interest. We've had discussions with the Department of Energy. The major steps we'll take will be done once we lay out our plans and get that capital cost and operating cost numbers refined and able to present to other parties. Another question. Are you on private or public land? Well, all of our lands that we're planning to design the plant on and the mine are on public lands administered by Bureau of Land Management. We've been working with the BLM office out of Tonopah, and so far the permitting aspects that we see on the project are looking very favorable. Next question. When do you expect to make the final investment decision? Well, Can't really predict the future that way. Things in the world change, but we're hopeful that once we have the feasibility study out and we have contacted prospective parties and shown them our plans, that decision could happen perhaps in the next year. So. Another question. Will you need an offtake agreement in order to build the plant? Is the pilot plant large enough to prove out critical engineering to scale up the facility? Well, take the last part of that question first. And I would say yes, the pilot plant is large enough to show what the elements are in the actual production facility. There's certain parts of the plant that are known quantities, like the chloralkali plant. There are many, many chloralkali plants in the world, about 40 in the US. So that's something that can be designed and run as a separate entity. The other parts of the plant, the filtration, the leaching, and some of the production that goes into making lithium carbonate are all known. I think in the pilot plant, we've identified a lot of those issues. Would we like to see something larger? Perhaps, but I think that next step might be a commercial plant rather than a demo plant. That's something we still have to work out. And the first part of the question, will you need an offtake agreement in order to build the plant? Don't know if we will need one. It'll depend upon the parties that come to finance it. And if we're talking about the federal government, then probably we do. They like to see that there's some future use for future market for the products. So. Another question. The release of your feasibility study has been delayed a number of times. And I'm asking, what is the definitive date now for the formal release? Is it by the end of September 23 or December 23? Please provide a definitive answer. Well, I would love to provide a definitive answer, and that's a very difficult thing to do because we have many parties that are involved in the feasibility study and a lot of review. As part of our process right now and looking at the cost structures and the production rates, we're going back and forth between 4 groups, and that includes the resource group that developed the mine plan, our wood engineers, our tailings people, and the ThyssenKrupp people on the plant. So when we make a change, it has to be communicated through all the groups, and then we have our own engineers that are looking at it. So we would like to say it's going to be soon, but we're expecting it before the end of this year. And that's just by virtue of the way that engineering works. So I'm sorry I can't time flies when you're having fun, and time flies when you're having a feasibility study. So, I'd like to make it soon. Now let's see, can we provide a high-level contrast between the current flow sheet to the lithium LiPro process? When do you bring saltworks portion into the pilot plant, or will this be absorbed by the LiPro process? Well, first on the LiPro process, what its differences are between the chemionics process is we've added perhaps another step in the ion exchange. There's certainly more automation that's gone into the coke equipment. The cycle times between loading and stripping have changed, and they're more regulated. And we're seeing that in the quality of solutions as they're coming out of certain parts of the plant. So more technically advanced than what we were working at originally with our chemionics equipment. I'd say it's just a big improvement and a big improvement in the operations. And that's been able to get us up to that higher grade, cleaner solution. When do we plan to bring saltworks into the, saltworks portion? That's the purification, final purification of solution, an RO step, and then some evaporation and crystallization. We might be looking to do that later this fall. It's not part of the LiPro, and we've been doing it out of Vancouver because it's a lot easier to ship the material up there than to try to bring down the whole pilot group of equipment and run it in the site and then take the people that are involved. So. Anyway, I see our time is now up. I appreciate the questions and everyone for listening. So I'd like to say thank you and everyone, all the best. Take care.